What about C- guys like me, Toby?
That's when you have to really, really polish them to find that diamond in the deep, deep rough.
Good afternoon. Welcome to the Northpoint of View. Dr. Walter Kemmsies and special guest Toby Browne, Jr. How are you?
I'm doing well. How are y'all doing?
Hey, Toby.
Great. So we're sort of taking the podcast from macro to maybe micro Main Street, if you will. And Toby and I have talked about this a lot, just how banking has evolved over the last 20 years since, I don't know.
Since I worked in banking.
Well, I mean, I sort of go back to, 2000 and then the run up to, 06, 07, 8, crash, things got way different, right? And then where we are today. So, Toby, what's your take?
The interesting thing about that is I think that if you were to talk to any banker at any time, they're always going to tell you how different it was from whenever they were doing it before.
Right.
And so it's always a progression. But then we had, obviously like drastic progression whenever we had the recession. Like coming out of that, there were going to be major, major changes. And the interesting thing about what I've gotten to do in the last handful of years working with you, working with other clients, is I get to make these phone calls in a much broader scope than I was doing before. Okay. And not just dealing with the banks, but with private equities and different firms. And it's one of those things that you start to see these trends over time. It seems universal no matter where you are. They don't seem to be in like one specific area, which kind of becomes concerning or something that we talk a lot about. Like, it's one of those things that I think that whenever we were talking about this, and one of my favorite things about the friendship with Walter is, I get to see this stuff or get these feelings of conversations, and then I can call Walter, and Walter can back them up with statistics and actual reality instead of just the craziness in my own head about stuff that you start to see.
Well, that's cool. Yeah, when you see what you're experiencing on Main Street is sort of part of the mega trend.
Correct. And the thing that we talk a lot about is the homogenization of the whole process. Like, all of a sudden, if everybody's saying the same thing, like when you had community banks, each community bank could deal with their community based on what was happening within that community. Like, all of a sudden, if stuff was coming in there, then they could be a lot more bullish on the risk that they were taking. Sure. But as soon as you start to broaden it out, and there's not those, which is, I understand why and understand what caused that, but as soon as you start to create the same rules, my question to Walter is always like, hey, Walter, is this happening everywhere? Like, what's triggering this piece? Like, what made this one? Because you can see why they pulled back here. And I have always felt that, let's just use an example that, they start saying that the population, that a lot of economy is moving towards the Southeast. All of a sudden, if you make it all the same, if you're doing the same type lending in Indiana that you start to do in the Southeast where stuff is moving, when you've identified somewhere that something might be pulling out of. And that's where when I talk to Walter and say, Walter, what's this doing? And so anyway, I would love to ask you, like, that's what we'd like talking about.
Well, let me ask you something. Glass-Steagall was repealed during the last year of Clinton being in office. To me, that's you didn't mention that earthquake. We had the 2008, earthquake. But do you think Glass-Steagall has already, removing it or repealing it, do you think that it's already worked its way through the system, or do you think it's still, the banking system is still kind of reacting to the repeal?
So, whenever you start talking about like checks and balances, I think that the checks and balances, and I think the banks would really like to feel this way or tell you this if they were there, that they're creating their own checks and balances. Like they still feel that way, but whenever you have less people creating the checks and balances, then all of a sudden it's like it all starts to sound the same. It starts to feel the same, and they pride themselves in treating everybody equally for the most part. Like, I mean, that's a real driving force behind it. So if all of a sudden they're reading the same economic factors or having the same fears, but they're doing it at a very macro level, then all of a sudden it becomes very difficult to adjust on a micro level to trends that are happening within particular regions.
Right. Okay.
I think that, one of the mega trends that, Walter, you and I've talked about is just how industry after industry we see consolidation, right? Yeah. And you really sort of opened my eyes to this a couple of years ago. And, you go through whether it's car manufacturing or cellular,
cereal.
I mean, you get down to the big three, right? And then something happens where then it's 2, and then they break it up and it goes back to 30, and then 20 years later it's back to 2 or 3.
Yeah, exactly.
And so I guess from the macro, is that happening in the banking industry? Do you see a sort of almost a global consolidation?
Yeah, so the commoditized part of the banking, as he was referring to, that has to continue to concentrate. Just get a lot of M&A, and you're making small margins on the business, so you need to get rid of overhead costs, and the best way to do that kind of stuff is buy another bank and trim the overhead.
Right.
Mm-hmm. So, but when it comes to other things like derivatives and stock brokerage, etc., there I'm not 100% sure. I mean, it does commoditize. And I worked in derivatives, and over a 6-7 year period, our margins came in so tight that I jumped into another part of the bank. I just didn't want to be there for the bloodbath. Yeah.
Yeah. Well, and the whole model, or at least a lot of the model of community banking, revolved around the fact that you couldn't price as well as the national guys. Like you just couldn't. Like if there was a customer that they wanted and you wanted, it's like they were going to get them.
Right.
Like I mean, like relationships go a certain distance, but all of a sudden, if they want it, they can get it. So you kind of lived in a B plus credit world where all of a sudden you had to say, all right, well, this one might not be absolutely perfect or fit perfectly on this big bank's box, but you got excited. I really got excited when you found that, like when you figured out why they were going to have a hard time with it, because all of a sudden it gave you a huge advantage.
What about C- guys like me, Toby?
That's when you have to really, really polish them to find that diamond in the deep, deep rough. But
that's what golfing trips and quail hunting trips are all about, right? It's like, I know you're going to do this loan, Toby.
Well, and you're actually a really good example of that. So it's like, and it takes funding that stuff in order to keep things going. And that's whenever you start to talk about the fact that you start to see, when you start to make enough phone calls and you start to see them in all different areas and you start to see like funding start to tighten up, like you don't know. And this was really the question to Walter whenever I started to ask the question, was all this fear of a recession. There's going to be a recession. Like there's not ever a time that there's not ever going to not, like you just don't know when it's going to be. But whenever you start to see funding start to tighten up, just in these real words, like these real polished words that all of a sudden this one guy nails, but then you hear the exact same ones from somebody else. The question to Walter was, hey, by doing this, are we creating something that was a fear? Are you taking the fear and turning it into a reality by your actions that you're doing?
Self-fulfilling prophecy.
Exactly.
Yeah.
Then the other problem you have too is, the Fed influences everybody.
Sure.
And Paul, well, I'm not going to go off on a diatribe. I promise you.
We had that talk before the podcast, right, Walter?
Exactly.
Leave him alone.
But Powell has been very confusing to figure out.
Sure.
The problem is he said he was going to provoke a recession, but then our country went on a building streak. I mean, the rate of construction of new manufacturing facilities, in the U.S. is threefold what it was on average the previous 10 years. And it all started with the Infrastructure Investment for Jobs Act, the Inflation Reduction Act, all of that money going into it.
Yep, Inflation Reduction Act. Let's pump a bunch of money into the economy and see how that reduces inflation, right?
Well, they cut the price of insulin for diabetics, so
all right,
it helped a
tit
little
for tat.
bit. Yeah, exactly.
Got it.
But that was very confusing, and I think you hear that when you talk to the banks, right? Especially the regional guys there.
Well, no, and that is the fun thing about the relationship with Walter and what you can do, because you'll have this. You can talk to people after office days or like throw out your frustrations, and then whenever you ask Walter, I'm like, Walter, I'm feeling this, I'm thinking this, and then all of a sudden Walter's like, well, they reduced the price of insulation.
Senior loan officer survey, right? Mm-hmm. That's my favorite. Are they tightening standards or are they loosening standards? And you can look that up.
And there's a real concept in that. Whenever you're trying to fit everything in the box, like banking became really easy whenever you could start to figure out, hey, there's this box. What the real trick of it is, and this is something that I'll talk about, I'm not saying it had any impact, but it's if you're an underwriting team and all you're doing is trying to figure out what fits in the box and outside the box, then you can get replaced pretty quickly by a logarithm that can figure that out. You know, the real trick to it is trying to figure out why there's something outside the box and how you offset it with something inside the box in order to justify squeezing it through. And I think that the banks are really trying hard to do that. Like, I think that they really like to think that they're doing that. And I think that they were starting to do a good job with that again. Like, I think that there was a time, and then all of a sudden, this like lack of the recession hitting when people thought it would. Like, they were projecting like 2 years out, you know, everybody was saying that it was kind of coming, and now we're kind of at that point where everybody said it should be here. So they're starting to not do that as much as they had been. Yeah. But I do think that there's an effort and a desire to try to figure out how to take that theory so that it isn't just a logarithm.
Right.
Well, it all happens on Main Street. Walter, Toby, great having you, man.
I'm pretty sure y'all just brought me just so that y'all could.
We gotta bring him back.
You could just show how factual, you know, Walter was with somebody sitting next to him. I'm for contrast.
Verification, validation of the C- credit. Hey guys, thanks. Good to be with you.